With the stock market up, way up since the low last March, is now the time to buy or to sell? Or to hold? And what are the best investments you can make in 2010? Here to help us navigate the market, our good friends, Ryan Mack. He's the president of Optimum Capital Management, and Doug Flynn, certified financial planner and founder of Flynn Zito Capital Management. Gentlemen, you have both been with us through this entire financial crisis, through the recession, and now into the recovery. Some people were really smart. They were well invested. You might have been so lucky that you first bought stocks on March 9th, 2009, right at the bottom, and you've ridden it all the way up. Most people are not that lucky. They're either still carrying a big loss from the highs of the market in 2007, or they're not invested. Doug, what do you do now?
Well, you should have been adding all along is what you do. But when you look at where we are now in terms of after the fallout from Lehman, I think you're really going to get the market back on a sounder footing, almost erasing that huge blip downward and back up. So what that means is you take away that extreme, the world is coming to an end and all of those dire predictions, and you get back on, okay, we have a recession, we're working our way out of it, there's a lot of opportunities, the market's going to get back to some solid footing, higher than it is now before we resume a good long-term trend.
Okay, so let's talk about a 1 year, a 5 year, and a 10-year time horizon. What should you be doing?
Yeah, I mean, if it's a 1 year horizon, you really can't be involved in the market to anything to speak of. You have to be in money markets or really ultra short-term bonds at most. Once you start getting into 5 years, you can bring in some stocks, some bonds, and you want to have the alternative space. And alternatives, we mean commodities, you're talking gold, oil, all those things in that space. But it's a mixture of stocks and bonds and commodities. And 10 years or longer, we always say you want to have as much in equities as you can sleep at night comfortably with, and then probably a quarter of the difference in alternatives and commodities and things like that, but much less in bonds for a 10-year time horizon or longer.
I know you both share a view that for the investor who doesn't think of themselves as highly sophisticated, your stock investment really you should think of as mutual funds, generally speaking. So while we're talking about buying stocks, if somebody doesn't know how to buy stocks, you're talking about mutual funds. In fact, you have a recommendation of a mutual fund for 2010.
Yeah, the T. Rowe Price Equity Income Fund, and again, I love mutual funds because they give you the access to broad diversification. So the T. Rowe Price Equity Income Mutual Fund has a $2,500 minimum investment. However, it does. Brian Rogers has been there since 1985. It's a very well-respected name in the industry. They have high yielded solid returns while curbing risk and really remaining very diverse. So most of their holdings have no more than a 4% rating, where most of them have about a 1% weighting. So, you know, for that individual investor that wants to be a little bit more conservative, they want to target some very diversified funds as well as get high dividend yielded stocks, great companies as well, then that's a great mutual fund.
Both of you do have some clients who'd like to buy stocks, and you're not scared of the market. So if somebody really does want to buy a particular stock, do your research and know whether you're in the right position to buy it. But you actually have an interesting tip for 2010.
Yeah, well, Rogers Communications. I went over to Canada for this one, you know, and it's a great company. At the end of the day, the diversified communications and media company located in Canada. As far as their wireless industry is about 2 years behind the U.S. industry. 90%, the cell phone penetration is about 90% in the U.S. versus 70% in Canada.
So there's room for growth.
So there's a lot of room for growth. They've had a little bit of slip up in terms of additional subscriber base lately, but they do have a lot of room for additional growth in that area. Superior wireless ability, superior cable ability. I think it's a great fund and a 4% yield on top of it. You're not going to get phenomenal returns from this stock, but when you get that 4% yield on top of that, it should be a great company for a good long term.
You know what I like about what Ryan is saying? He's talking about large caps. He's talking about more established names. He's talking about some international companies. Canada is international from the U.S. But those kinds of themes are very important as we move on. It's going to be more of that, and the dividend yield and all those things that people look for, I think, as part of the foundation of what you want to do with the core part of the portfolio.
All right, so you're both saying that for investors, our viewers, 2010 is going to be your year of opportunity. A little bit of homework will help you figure out what's going on. Ryan, great to see you as always. Doug, thanks so much. Christine?